Hey everybody, welcome back to Thursday afternoon here at downtown Toronto in the financial district.
You got the Western look today.
Well, that's reflected in our new logo.
Oh, every day it's about the shirt.
See, I'm thinking, Ed, we got this new idea.
That's a good one.
You and I are going to wear the same thing every day.
I'm not so sure that's going to happen. Unless we wear our birthday suits.
Whoa! Whoa! I don't think anybody wants to see that.
With a thong in my heart.
That thong again? I've heard that thong
I've heard that thong 1,000 times.
Last time I heard that thong, I fell off my dinosaur. It's so long. Anyways, so today we've got an interesting show. I mean, really interesting. We've got Dan the charting man.
You know what? I'm always interested in technical guys and their perspective.
Dan gave us some great breakdown of the new theme. Thanks. I'm not going to say thanks to us, but we noticed what apparently everybody else did: the convergence and correlation between the S&P and cannabis stocks, and really all stocks right now. So he's going to be here first. Then we had Jason Wilson from...
now what? That's yours.
We had Jason Wilson from the ETF Management Group, and his group manages the Alternative Harvest ETF, trading on the NYSE under MJ. And they have $700 million came in this year to that ETF. It's the biggest ETF in the world.
Wow.
So very interesting comments
MJ is the ticker.
MJ is the ticker.
So we can plot that, and we will.
We're going to pull up a chart.
I'm going to watch that one, and I'm going to bring that up on a regular basis.
You know what we could do is we could compare.
It'll be one of our charts today.
Well, let's compare.
Let's see.
Let's compare MJ to HMMJ. Whoa. Now, either we're going to get both guests back on a lot more sooner than we thought, or neither one of them are ever going to want to talk to us again. Anyways, but that's coming up after Dan the Charting Man. And what else we got? Charles Taerk is here a little later in the show. Charles Taerk is the president and CEO
Interesting
of
you have him here on
Ninepoint.
American Thanksgiving.
Charles Taerk is the CEO of the Ninepoint UIT Alternative Health Fund, and he tells us about some of what his fund is doing. And then we're going to take some questions from you, the audience. Ask us anything. And let's see, after that, what are we going to do, Ed?
We're going to sign off.
We're going to, well, are we going to go for a beer?
Yeah. There's parties all over the place tonight. You know why?
Why?
Because they're all watching football.
I don't want to
I called up Donnie's saying there's a big party at Kelly's Landing.
Okay, so
put on by the CSE.
Oh, so free beer.
Yes.
Free beer. Free beer at Kelly's Landing, thanks to the CSE.
You know what?
You heard it here first,
we're gonna go there for
value-add investment advice.
One or two of those free libations.
I think we should.
Yeah.
Even if we have to put up with a little football. Okay, so Edward, let's look at the charts. Now, you made an interesting comment that you felt that today's action in the markets might be negatively impacted on a volumetric basis, thanks to the idea that the U.S. segment of the North American coterie of investors is watching football today and not at all glued to their computers and trading.
Well, they may be doing both.
Okay, just curiosity. Why is this TV not on? I went to all this trouble to set it up and it's not on. See if we can fix that maybe. It's plugged in. I plugged in the HDMI. How the hell do you turn that thing on? Anyways, so first thing we're going to do is we're going to pull up the indices. So we've got the Midas Letter Large Cap Canadian Cannabis Index up.
How much?
Down 1.91%. Down 2%.
Down 2%. But I bet you the volumes are substantially lower than average.
That is, without a doubt, that is the case.
Yeah.
The Midas Letter Small Cap Index is down 0.44%. The Midas Letter Canadian Venture Index, which is all companies in this cannabis space trading on the TSX Venture, is down 1.35%. And the Midas Letter Canadian Cannabis CSE Index is down a paltry 0.22%. So very
lackluster performance.
Lackluster performance.
With maybe unmuted volumes you'd expect, not so much change.
Yeah, well,
muted volume from... Honey, I'm going to get a beer. Don't change the channel because I'm coming back to watch football.
Is that how it works?
Something like that.
What the hell is going on there? There's the front page of our website. Some great stories that we're following, and you can too if you go to our website at midasletter.com/cannabis. That there is Duma Winshu. He's the CEO of Province Brands, trading nowhere yet because he's still private. He's going to be trading somewhere soon. That story is starting to get legs. He's starting to license that technology to all kinds of breweries, like micro-craft breweries. So a micro-craft brewery on his own does not great revenue story make. However, a whole bunch of craft breweries across North America that are licensing this technology makes for substantial revenue potentially.
Did you see the big news today out of Alberta?
No. What big news?
They're halting all licenses in Alberta because they can't deliver cannabis.
Driver's licenses?
No.
Oh, cannabis licenses.
The ability to distribute. Like, for instance, if you want to get a license to distribute marijuana in Alberta, no, you can't go there. You know why? Because they can't deliver the marijuana, and they'd say that would put you under. If you open up and you can't deliver. So they've
So
halted
you're
this.
saying that the LPs, the growers, can't deliver?
They're running out of product. There seems to be this.
Well, so let me get this straight. We've got Aurora Sky, 975,000 square feet, producing a ton of weed every week, and the province of Alberta is sucking all that up. I think that's probably what it is.
I don't
They're
know.
the only big grower
You know
there.
what? We should probably read the news item. We should probably. There's a news item somewhere.
Well, we probably should have done that before we got here.
Well,
but
you know what?
That's okay.
I should.
Oh,
You know
how
what?
do you like the
Maybe
new logo?
what I'll do. I love that pattern. I mean, you know, someone should probably think about making that into a shirt.
What shirt?
What?
That's a great
What?
idea.
Did you just?
Huh?
Whoa! So
what
let me
happened?
ask you. Here's what I want to know. If you came out right now wearing, say, a black shirt, would all that become black? Magically.
Yeah.
It's a chameleon logo.
It's a chameleon logo. Basically, that's remarkably physiologically connected to my DNA somehow. I don't know what it is.
I don't know.
Or at least my tailor.
You couldn't do that 100 years ago. You know that?
No? So let's take a look at some of the stocks that are moving around today in spite of this lighter volume day because of
that's all
football.
right.
Thanks to football, we're having a light volume day. Is that what you're saying, Ed? Boy, oh
American.
boy, oh
I'm
boy.
saying it's thanks to Turkey Day.
I'll tell you, my day was no less busier today than every single day. In fact, was so busy, I'm not even going to go there, but I missed a lunch today with Howard Glassman.
The commentator.
Yeah.
Yeah, I like him.
He now thinks I'm a complete flake, but that's okay. I'll convince him.
Did you miss a
thoroughly.
lunch with him?
Huh?
Did you miss a lunch?
I missed the lunch because it turns out our calendar system blew up today, and it's still sending out like 35 updates to this one item. And
Did he finally call you and say, "Where are you"?
Yeah, I said I've been here for half an hour.
How many beers have you had? You should have
Well,
said.
he said these bottles of water are getting very expensive. I think he quit drinking quite some time ago. So among the great performers today, I'd like to point out is Wayland Group.
I don't want people to see the back of my head anymore, so I'm going to show them the front of my.
Wayland Group is up $1 up to $1.45. Here, Ed, you keep talking. I'm going to go turn on this TV here.
All right. So look, we got
Pull
here.
up a chart, why don't you?
We got TER. We got OH up 3%. Yeah, I can't see the volumes, but I gotta suspect that today's a quiet day. Quiet. Wayland Group. There's a performer up 12 cents, up 9%.
Thank you. Wayland Group. That's what I'm saying.
Wayland. That's the one you mentioned. That's one of your favorites.
Everybody,
He's back. He's back.
How do you like my new shirt?
He's back.
My new logo shirt. He just disappeared. Origin House up 3.24% to 861. Now that thing is starting to trend in the right direction again. I'm happy to see that because I own it from 970. So down slightly. But let's see what else. How did our GGBD?
GBDB. That's all, folks.
GGB.
Let's take a look at that one. That one looks interesting. I like that.
Green Brands. Well, GGB. Look at that, 350. So it closed up 3.55%. I do own 20,000 little units of that. And
you didn't. Look at this. Weeds allocating $1 billion towards new acquisitions. Boy, oh boy.
Well, that's old news.
Is it?
But it's the #1 shared item on our website, so it is worthy of comment. Well, it's not that old. It's November 15th, so that's pretty somewhat fresh, a little fragrant. Anyway, so as I was saying, we had Charting Man Dan here today, and we had quite the well-rounded conversation. And here's what we talked about.
Let's see what Dan the Man had to say.
Our next guest is Charting Man Dan McDermitt, who's one of the principals behind thechartguys.com. Dan, welcome back.
Glad to be back, James. Thanks for having me.
Hey, Dan, your input is always highly valued here, and your insight into what is moving the market from a technical basis is peerless in my regard. I'd like to talk to you a bit about some of the events we've seen. For example, we've sort of noticed a correlation in the last 10 days or so that where the cannabis sector has become more dependent on what's happening with the S&P. And I'm wondering if you've observed that, and what sort of is your take on that?
Absolutely, I would certainly agree. The S&P 500 is very critical to the overall gauge of the market sentiment, and it's going to be reflected in most markets, especially one that's so high risk and a little bit less developed like the MJ space currently is. In my opinion, these correlations pick up because when you have hype and euphoria like we had leading up to the first day of legalization sales in Canada, that's when there's volume, and that volume can sort of guide the market on its own. But when that hype fades and you no longer have that significant volume coming in, that's when the algos and the bots take over. And so these Canadian names that are listed on the major exchanges, the NYSE or the NASDAQ, like Cron and CGC, they have these bots correlated to the S&P 500. And that's the main driving force, as there's not this steady influx of volume that's allowing the price to pretty much act on its own as a sector. So you'll see that those names that are on the NYSE and the NASDAQ are significantly correlated to the S&P 500. And in my opinion, it is due to those bots and algos doing the automated trading.
Interesting. So then in going forward in the future, do we need to keep more of an eye on what's happening sort of on the macroeconomic scale that drives the S&P in terms of planning our day trades in the cannabis sector?
Yeah, absolutely. I mean, if we can just see again, it's always back to emotion. When we're in a very bullish market, we have euphoria and we have people very easy to get excited and to say, yeah, these projections, we can hit these and these can be the market caps. And then when you see the weakness that we've seen in the past month in the S&P 500, the narrative shifts. I mean, how many times did we see Canadian MJ articles talking about who's going to be the next deal, Coke and ACB and all, these predictions about what's going to happen? When's the last time we've seen one of those articles? And it's just because the sentiment has shifted. And now, we're getting articles about maybe the government is overstepping its boundaries a little bit, or, the person who was blocked at the border and is now banned from the US because he's, dealing with Canadian MJ stocks. It's a complete shift in the sentiment of the space. The articles reflect that, and we need to be aware of what the overall market sentiment is when we make our daily game plans as a trader.
Okay, so what is the sentiment telling you today going into this Thanksgiving Day weekend down there?
Sentiment, it's not good to be honest. The bulls are not proving anything. The S&P 500 just saw a very weak bounce attempt to start the morning or to start the week, I should say. And it's just not giving confidence at this point. We're seeing the bounces sold into. Canadian MJ is responding in kind with seeing bounces sold into, and it's hard for the bulls to get any kind of momentum going. So as we head towards the end of the year, for me, I need to wait for the S&P 500 to shift its sentiment and to start to see some hope and some upside. And honestly, it goes all the way back to the trade deal with China. And I know a bunch of Canadians are probably not excited to monitor their Canadian MJ positions. They need to be tracking what Trump is doing and what this China deal is doing. But in the grand scheme of things, it is important to know the macro level of what is going on in the economic world.
You bet. Okay, so how do we play from a technical basis in such a market? What are you doing?
I'm personally all cash and being very protective and locking in my profit as a bull when I have it, knowing that it's swimming upstream to a certain degree, trying to play bullish in this market. So what I will do is I will wait for the longer term trends to change, which we can look at on the charts here in just a minute as some potential signals for that. But the trend has to change, and euphoria, or I should say the emotions, will change with the trend if and when that does happen. And that's when it's going to be easy to be aggressive again as a bull in this space. But until that happens, I'm trading less as a bull. We're even looking bearish, and our trading styles are definitely reflecting the fact that the market is in a cautious period right now.
All right, Dan. So what can we tell looking at technical signals that could have warned us about this downdraft that we got sucked up in?
Well, the downdraft on the S&P 500 happened very quickly. It was back here on October 10th, just that very high volume dump day, and it lasted 2 days. So when the pullbacks do happen, they happen extremely fast. And if we look on the weekly time frame, we can see it happened back in February, and the market eventually did recover. And then it happened again very similarly back here in October, just last month. So they definitely happen very quickly, and that's why using stop losses as traders can help protect us from, waking up to a 10% kind of down day in the Canadian MJ market. But what we have right now is a tightening range that's going to dictate pretty much the momentum for the market as we start 2019. We have the low of the initial dump, which is a must-hold support, and we're currently heading towards that level. So we're going to find out in the next week or so, can the bulls hold that level and see some bounce off of it, or are we going to fall through that level and head back to the February dump lows, which would definitely increase some fear in the market. We also have a clear resistance level that we're watching. There's two tops here, and if we look on the daily time frame, we can see with more detail, we bounced and rejected, and then we bounced and rejected from that exact same level, inability to break that double top, and we headed right back down to support. So we're in this tightening channel right now, and pretty much if the bulls are unable to break this level, which on SPY is in the 281s, the bears are going to keep control of this current market. And again, if we break that October low, we're going to see some more increased fear. That's when all the talking heads on CNBC, they're going to start talking about recession and all those buzzwords that get the public nice and riled up. So that's the key support that we're watching into the coming weeks.
Huh. Interesting. And so what are some of the more interesting charts that you've been following in the cannabis space?
So always CGC, the sector leader, and it's showing very similar correlations to the S&P 500. And we can just, visually look. We had the low at the end of October. The high of the bounce was November 7th. And then here we are back at the lows. And we just pull up SPY again real quick. We had the low at the end of October, high of the bounce. Here's November 7th right there. And then here we are back to testing the lows. So very significantly correlated in the past month of trading. And that's why, for me personally, I always look at the S&P 500 first before I do my analysis on the Canadian MJ space. But at this point, we can pretty much say that the trend is not going to change for the bulls anytime soon. Anything on the weekly time frame for CGC under $46 is just another lower high. So from where we stand, that's, we can see a 35% move and still just set a lower high on the weekly time frame. So it's going to take multiple weeks of a trend change to start to get going before we can even consider it, which is why the bears are very comfortable with where we stand in this market at this point. Another key stock that I'd be watching is IIPR. And this one is one that we've been watching since the IPO because it was the first MJ name to IPO on the NYSE, and that was very significant for us. I've been trading USMJ stocks for 8 years. That's how I first got interested in trading, and I was limited to penny stocks, and it was the Wild West. A bunch of them were scams, and I kept saying to myself, I can't wait till we have legitimate stocks on legitimate exchanges, and IIPR was one of the first ones to do it. But look at the last week of trading. It's very clearly doing something completely opposite what the market is doing and what the Canadian MJ space is doing. And IIPR is a US-based REIT, and they pretty much, their business model, to sum it up very simply, is they buy land from companies that need capital because capital is so limited in the US with the banking sector not being allowed federally to interact with it. So they buy the land from the companies, and then they pretty much rent it back to these companies. So they give the companies the influx of capital by buying the land initially, and then they just collect those monthly payments as their income. And they offer a dividend, and REITs usually do. So REITs that issue dividends in times of uncertainty in the stock market are seen as a bit of a safe haven because those dividends are a bit of guaranteed money. So here we are hitting all-time highs on IIPR 3 times this past week and last week as well, closing at an all-time high just yesterday. And it is a very strong name in a sea of weakness in the sector. So definitely one to be keeping an eye on.
Yeah, no doubt. So do you think that its stellar performance is because it's more in the category of real estate investment trusts as opposed to being a cannabis producer?
Yeah, it gives them that little extra barrier of security, in my opinion, and that is what has attracted some of this attention. Another thing I want to talk about is the rest of the USMJ plays who aren't listed on these major exchanges, and they have limited capital. We're seeing less correlation with the sector as a whole and the S&P 500 because they're traded on the over-the-counter exchange. And just looking at MedMen here, ticker symbol MMNFF. And one thing that we've been, weary about with these stocks is that because they are in such an unfavorable business environment at this point with the laws, that they pretty much have to issue shares to raise capital. And when you issue shares, you increase the supply of shares, and that causes the price to go down as the market prices in these newly formed shares. So we had a scenario this past week where we had a halt and then a gap down open as, continuing news comes out about these deals where they're issuing shares to raise funds. And that's just something people need to be aware of, that, going long term in a stock, knowing the future for USMJ is bright, that's not enough. And it's because the underlying financial statements where you can find out, is this company strapped for cash? Are they going to have to dilute? And that is going to, potentially drive the price down as there's months and months or years and years as we patiently wait for federal law changes. We could see continued further downside as these companies do need to raise funds. So that's something to be aware of with these smaller cap names in the USMJ sector.
The proliferation of U.S. companies trading on Canadian exchanges that come to market with $2+ billion market caps that, no matter how you look at their financials, they need to be backfilled to justify that valuation. That's not going to happen for a long time in the future. And they come to market with these super voting structures that prevents retail shareholders from participating meaningfully in the voting process. Does that have any sort of, do you have any sort of issue with that at all? Does that affect your attraction or your revulsion towards these stocks? I'm talking about like Acreage Farms, Curaleaf, M Jardine, Trulieve, etc.
Yeah, it's definitely a factor to be aware of as, long term. And I had that thought just yesterday as we're sitting there and saying, we know these companies are going to grow, and if our money is in them, we're going to see profits. But what are you really owning? Are these companies ever going to issue a dividend? They have all the voting power. And I'm used to that because, like I said, I come from penny stocks, and the officers always make sure and retain the ability to outweigh any of the shareholders. And it is important because it's pretty much entrusting your money with all of these people, and you have to do extensive research into the background of these people to say, have they been successful in the past? Can I trust them with my money? So yeah, that is a bit of a red flag that you can, justify looking past to put your long-term investment into it. But it's definitely something to be aware of, that it's sort of, entrusting the captains of these ships to guide it in the right way, and it doesn't always work out that way.
Yeah, you bet. Dan, appreciate your insight as usual. We'll come back to you very soon. Thank you so much for joining me today.
Absolutely. Glad to be back. Thanks for having me.
Welcome back. Charting man Dan, always astute man with a chart and a pen. Anyways, so interestingly enough, our little theory about the convergence of correlation with the S&P and the mining sector generally borne out by Dan's analysis, and that's really interesting. Hi, Ed.
I ripped my shirt. I'm suing.
Oh.
Did I do anything wrong?
Well, you yanked the plug out of the teleprompter, but
no,
that's
I didn't.
okay.
No, I didn't.
Yeah, it's on the ground there. That's all right. We don't need it right now.
Okay.
So Jordan Botha is saying something about my shirt here. I'm trying to see what it is, but there's comments coming in ad infinitum.
Ad nauseum.
Ad nauseum? Ad nauseum. Oh boy, you're cracking yourself up there today, aren't you, Ed?
Pretty good, eh, when you can make yourself laugh.
Yes.
I'm interested in Dan DeMan's comments about he's very defensive right now. He's jumping.
He's all cash.
Well, duh.
Yeah, duh. Are you all cash?
I'm cashed up. I got paid this week. Okay.
But have you got any exposure, any value at risk?
I got Crown. I got tons of Crown. I keep buying.
That's a long term.
That's a bet on copper. It's just
full disclosure. You own any?
Full disclosure. I'm getting to the point where I might have to declare I'm an insider.
Really?
Well, not
wow.
that. No.
That's a lot of stock. 3 million shares. 2 million. 2 million. Wow. So if that stock goes to like $1, what are you going to be?
A millionaire.
A 2 millionaire.
Then I can give that 2 million to a broker, and he can turn it into $1 million.
Well, or even better, nothing.
How do you make $1 million in the market? Start with 2.
Give the rest to a broker.
Anyway.
So a couple questions from our beloved audience here. Jordan Botha, we're going to stop. Why watch football when you can watch Canadian stocks, he says.
Well, listen, I'm not saying. All I'm saying is we're in Canada.
Yeah. And basically, I agree with Jordan.
Okay. Well,
Who
you
the
don't
hell
like
wants to
football.
watch football?
You don't like football.
I love football.
Well, okay, what if that was the Big Dog Show from New York was on right now? You'd probably be watching it.
Big Dog Show?
They have the biggest dog show in the world from New York every year. And
why would I watch a dog show?
Because you love dogs.
Well, I love dogs. I love my 2 dogs. I hate all other dogs.
You own enough of them.
I've got 2.
Oh, no, I mean in the market.
Oh.
Just say.
Oh, yeah, geez, rub it in.
Okay.
Anyways, further questions here. Adrian Kwan says, is that a mug of James? Well, this mug actually belongs to the studio, so it's not really mine. It's kind of ours.
I'd like to have my picture. Why don't I get my picture on this?
We're gonna start.
Yeah. Somebody's already using it. Look, I was about to take a sip on this.
It's like somebody used mine for an ashtray. Yep, it was
Ooh.
an ashtray.
Ooh.
Yeah, that's a mug of me. That's my mug on my mug.
Mug of me.
Mug of me. Kinetic Cuts. Midas Boys, what were your thoughts on Bitcoin crypto space with this recent dump? Any public companies investing in the space in Canada that interest you? Hive, VST. Kinetic Cuts, I gotta say that I have basically been voicing the position that cryptocurrencies are not and can never ever be anything but a proxy for the currency that buys them and the currency into which they must be converted ultimately. I know, people are buying houses with crypto and boats and cars, but believe me, this all comes from fiat and goes back to fiat. The cryptocurrency value proposition is defective if you think that it can exist as a monetary supply outside of the control and purview of government. KYC, hello, is it anonymous or is everything tracked?
I don't know enough about it, but I will say this. Back last year when it ran up to $20,000, that was clearly an exponential move.
I think that will be determined to be fraudulent.
Well, it doesn't matter what it was. If you look at a pattern, it reached a number, and then it moved down half of that gain, much like Tilray. Tilray hit 300 and back to 150 the same day. Those tops will stay there for at least 5 to 10 years. Whenever you see that kind of a top, you saw it in the Y2K. You saw it with Bitcoin. Like,
but
Bitcoin's
you know how
under
it reached
5,000.
that top is Tether. Tether was buying Bitcoin using Tether, another cryptocurrency, which they said Tether was backed by the US dollar. And so the amount of Tether that could be issued was only related to how much US dollars the company actually held. And Tether was found to not be holding any US dollars. So all of those purchases fraudulently drove the price to 20,000.
Not particularly interested in the whys of this, but it happened. It happened, and here we are, a busted chart formation. So I say, unless you can trade the nimble rallies, stay away from the area. That's what I would say.
Good call. We're in agreement there.
We're in agreement on that, but we look at it from two different perspectives.
You look at it from that side of the table. I look at it from this side of the table.
I don't. I look right now. I'm not seeing me, am I?
No.
And you're not seeing you.
That's not me. Is that you? Anyways.
Oh, that's you.
So there. I hope we answered your question, Kinetic Cuts. If we didn't, please request a clarification in some more guided way. But
the Bitcoin bubble is bust. Bitcoin bubble bust.
Bitcoin bubble bust.
Alliteration.
Bitcoin bubble bust. Cooter 8635 is asking us.
Cooter,
guys, can you comment on the Ascent Industries fiasco? Any hope of recovery from that?
That's the one they mentioned yesterday about they lost their Health Canada, or they lost something valuable that caused the thing to...
Yeah, okay, so Cooter, I'm going to refer you. If you go to our Midas Letter channel and search for Ascent Industries and put in Midas Letter, you're going to come up with our interview where I interviewed the CEO of Ascent Industries shortly after that event. And is there any recovery from that? Doesn't look like it right now, does it? But it really depends.
Should we throw up a chart?
If you look at what happened with after, for example... Organogram getting nailed with the use of myclobutanol The other company that was ultimately bought by Metrum also got caught with myclobutanol. These companies ultimately survived and recovered from that. So is there a path back? Absolutely.
But isn't it a function of how much cash this company has? Because when I saw the price,
Cash
20
is part
cents,
of it.
20 cents is a small amount.
Yes.
Like there's obviously, maybe there's a lot of shares, so 20 times, say, 4 billion shares is 800 million. But what's the market cap? Because if you get to a smaller enough level, it's going to get tough. I think it's going to get tougher.
You bet. Well, yeah. So I don't think the chances are looking very good right now, in that they do need some cash to survive this obstacle, this fiasco, as you put it. Maxed Out wants to know, James and Ed, realistically, when do you guys see the U.S. fully legalizing the doobage? Sweet baseline for your opening, by the way. He likes the baseline for the music.
Okay, you know what? That's pure speculation. I mean, I think there's more and more states do it, then there's going to be that, the states are going to say, hey, it's legal in every state. What's the Fed doing here? Or what's the federal government doing? So I think it's going to happen. I think it's just a matter of time, right?
Well, we did see the CEO of Taerk publish a full-page ad in the Wall Street Journal.
Wall Street Journal.
Basically,
that's the guy we interviewed,
pleading to President Trump to please advance deprohibition on the federal level. Did it have an effect? Does Donald Trump talk about it?
No.
One of our guests today, Jason Wilson, who's the founder of the ETFMG Alternative Harvest ETF, he said that it was really more important that Pete Sessions got shown the door rather than Jeff Sessions in that whole sort of pathway towards deprohibition.
Wait a minute, there's two sessions?
There were two sessions. They're both over.
But there's the morning session and the afternoon session.
And they're both over. I know. They're done. Anyways,
when you have a lot of energy,
there is the potential that the wild card
session.
president, Donald Trump, could try to issue an executive order proclaiming federal deprohibition of cannabis. It is possible because he doesn't really play by the rules.
He doesn't smoke it.
Well, he doesn't smoke it, but he doesn't play by the rules
either. He should smoke some of his hair.
He just makes up things as he goes along. So that could happen. That's the wild card. He could do that any day. The other side of it is, in 2020, will we get a Democratic government instead of a Republican one? That's a question that nobody can answer with any certainty at this point.
Yes.
I think a Democratic government would probably lead more quickly to a deprohibition federally than would the renewal of a Trump government. And then the big question is, then it's 2 terms, and then can he hang on? That's for 2024 now. I mean, it's got to happen before then.
They're almost starting. They're going to start talking about the next election here pretty soon. It happens that fast.
Yes.
Where does the time go?
It goes in one ear and out the other.
Oh. Yeah, it's an amazing concept, this whole thing of time.
It is. It is enjoyable, isn't it? I mean, it's funny because the older you get, the less you have. And yet you've got the entire body of your life that up to this moment, and relative to what's left, the older you get, the shittier that looks. So you start to get to thinking, I got to make a move here. I'm going to be dead soon. Let's hope not.
Yeah. Well, what move? There really is no move, right? Because eventually you're going over the waterfall.
Well, no, I'm going to invent the eternal life pill. So there is some urgency to that.
Yeah. Okay.
Yeah.
So let me know how that goes.
Okay. I'm halfway there.
I'll invest in the company. I'll invest in the company after it works.
Well, nobody's going to raise money on a company after something works.
That's true.
It's like, what's the point?
Yeah.
Anyway, so we talked to the very interesting and knowledgeable Jason Wilson today for the first time from the ETF Management Group's Alternative Harvest ETF, which is the largest marijuana ETF in the land, south of the border, with over $700 million of funds coming in this year, and started trading in December 2017 with only 5.6 million in assets under management, and now it's up over 800 million.
Wow, that's big.
That's huge. Smart guys. Anyways, here's what Jason had to say.
Okay.
My guest this segment is Jason Wilson, a partner with ETF. ETFMG Alternative Harvest ETF, trading on the NYSE under symbol MJ. Jason, welcome.
Thanks for having me.
Jason, what is ETFMG Alternative Harvest ETF all about?
It's all about marijuana. We are the only publicly traded ETF in the US right now that focuses primarily on marijuana companies.
Okay, and so do you concentrate on Canadian companies or US companies or a basket of the entire mix?
Yeah, our fundamental guideline for the US basket is any companies we have cannot be in violation of federal laws. So we do not have, the MedMens in there. We do not have, Origin House now, Canada Royalty. But we do have all of the large licensed producers, Canopy, Aurora, Tilray, companies like that. And they make up over 70% of our holdings.
Okay, and ETF Managers Group as a management firm, how much capital under management?
Just shy of $4 billion US.
$4 billion. Okay, and tell me about the management group. What drives your guys, and what's your sort of wheelhouse?
Wheelhouse is all thematic. So I think the first large ETF they're probably broadly known for is Hack. So that's a cybersecurity ETF. So they launched that a few years ago and then became really popular when we had the whole Sony dust up, if you remember that. So that drove a lot of assets into Hack. And then they have a bunch of other thematics as well. They have immunotherapy funds. They have a gaming fund, which is, esports is becoming more prevalent now. In addition to that, they have AEIQ, which is if you're familiar with IBM Big Blue Watson, the ETF's effectively managed by that artificial intelligence. So that's another cool one. And then MJ is, we launched back actually December of last year, late December of 2017.
Oh, okay, interesting. So the advantage to an investor of investing in an ETF as opposed to investing with a fund or a money manager?
Core thing is efficiency. So with respect in the US, particularly with ETFs, there's a tax efficiency. As units are created and redeemed, it's done through a physical exchange of securities, a creation-redemption process. And what that means is the transactions happen outside of the fund, so we don't have, when there's rebalances, when there's any kind of changing in the constituents for extraordinary events, that's done effectively externally, so we don't have any tax drag in the fund. It also bears a lot of the transaction costs outside with the market makers, the APs that run it. So it's a little bit more efficient from a cost perspective and a tax perspective. And of course, you get a lot of liquidity trading on the New York.
So what is the value proposition in terms of a retail investor investing in an ETF versus some other type of asset manager?
The primary one right now is, well, first off, MJ is the only, call it, marijuana-focused fund in the US, period. And then just generally speaking with ETFs, generally versus a managed account or picking your own stocks, it's one trade that provides exposure to the whole sector. And there's a lot of folks in the US that are struggling how to pick winners and losers. No one knows how this is going to shake out. We're in the early innings of this game. So what we try to do is provide as much exposure to the cannabis industry in totality. So that's the main purpose behind the ETF. It's a cost-effective way for investors to get that one trade access.
Oh, okay. So then how has the ETF performed relative to other asset baskets in the MJ space?
There really isn't any other asset basket. I mean, this is the interesting thing with thematic ETFs. It's not like you have, if you look at SPY, the big ETF in the US that tracks the S&P 500, you can benchmark it to that. With a thematic, you're really it's a rules-based formula that rebalances quarterly, and you're just going after the segment. So we perform in line with our underlying constituents, but at the end of the day, it's really, we just put in as many stocks as possible that meet our criteria, which is, do they primarily generate the revenues from the sale or production of cannabis or cannabis-related products, things of that nature. And then we filter them through for market cap and liquidity requirements, and such that we can actually trade the vehicle appropriately, and that's what determines what we are. So we track our own index. So at the end of the day, we just perform relative to how the space goes.
Interesting. Then, so how has the ETF cannabis performed? The cannabis ETF performed relative to the S&P?
Oh well, it's all over the map. Pick your day. I mean, it's like with HMMJ. We started the year with a pretty good run. We fell back off again, and then we ramped right back up, and now we've kind of come back down to flat. So it's depending on your entry points. It's been a tough slog at times, and a great run at others. It's been a pretty volatile space.
Sure. So in terms of a minimum criteria for company to qualify it for inclusion in the ETF? What are those parameters?
Market cap, so we want a minimum size, at least a few $100 million in size. We want to have a minimum share price, and that has to do with the cost of transacting in that security. If it's just trading at 50 cents a share, and because we have about $850 million in assets in Canadian dollar terms, even putting in a 1 or 2% allocation, if it's a 50-cent share, obviously can lead to a lot of costs. But primarily it's liquidity. That's another big one, is making sure that the stocks that meet our filter for business eligibility, do they have enough liquidity? Can we actually trade them? If you can imagine that, especially with some of these stocks, we might start with a 3 or 4% allocation sometimes, and if they run up in price, like some of them have, it could turn into a 6 or 7 or 8% allocation.
Sure.
Then if we have to rebalance to bring it back down in line with what our guidelines are at every quarter, we might have to sell or buy a bunch of stocks. So it's making sure that we can go out, the portfolio manager can go out and actually do that.
So what is your expectation for the performance and evolution of the whole sector in terms of valuation going forward, say 12, 24 months?
12, 24 months, I think that it's going to be pretty, reasonably stable. We had obviously a lot of euphoria in the space. There was a lot of retail money getting into these stocks. Everyone's really in growth mode. I think that over the next 20 to 24 months, you'll start to see execution on business plans. And that's what we're really looking forward to see, is how these companies that are in the ETF actually perform. And you'll start probably seeing some winners and some losers and maybe a little bit more consolidation. I think you're also going to see other companies potentially entering the space. It could be on the biosynthesis side. It could also be if we have passage of the Farm Act or the States Act with a new House down in the U.S. Who knows? Our universe could expand a little bit too. But I think overall we're going to see in the short to medium term a lot of volatility, but a general trend upwards. But over the long haul, clearly this is a new space expanding globally where we expect to see a lot of growth down the road.
Right. Okay. So the advent of deprohibition in the United States, I imagine, would represent quite a broad sector catalyst that you would expect to really open up the landscape in the United States. And some asset managers in Canada have expressed that they're already lightening up on the Canadian side and positioning more for the U.S. opportunity in anticipation of an eventual deprohibition federally. Is that sort of in line with what the ETF is strategizing at this point?
Absolutely. So first off, we capture any company that is in the space legally. So even though we cannot include right now some of the companies with U.S. operations, so up until recently, Afria was not in our fund as an example. But when they divested their U.S. holdings, then we're able to include them on our next rebalance. But we're seeing with a lot of the companies that are in the fund right now, how they are in fact positioning themselves in the U.S. Where they're either doing that through partnerships or acquiring, looking at research opportunities, or maybe it's on the branding side, licensing side. I think we've seen TGOD do a number of things in that space recently. So it's the fund through its constituents is definitely benefiting from that,
right,
as well as the global expansion. And ultimately, when there is, even if it's through the States Act or through the Farm Act, if that makes its way through Congress next year, we would then be able to start putting certain of the U.S. companies into our fund as well.
Okay, so is the objective in the management of the fund to manage volatility on behalf of the unit holder, on the ETF holder, and is that part of the attraction?
I wouldn't say to manage volatility directly. A large part of what the portfolio manager does in a thematic fund like this is making sure that the fund goes in and out of positions if it ever needs to change its weightings prudently. Okay. So that is part of it. And if you think of it where if suddenly we have to, if one of the companies doesn't meet our criteria and we have to remove them, you can't just sell all those stocks in one day. So that's one thing with the ETFs, even though you track an index in theory, the index the next day will suddenly not have that stock. The ETF might not be able to suddenly have that stock. It wouldn't be prudent to just go out and sell it. So yes, you're right that they allow the investor to track the index and maybe sometimes not so precisely because of the volatility it could cause in the market. So that's a subjective judgment call. But the bigger benefit to the investor is to be able to participate in the whole space in one spot.
Okay, well that's really interesting, Jason, and we appreciate the insight, and we'll have you back on the show at regular intervals as this whole sector unfolds. Thank you very much for joining me today.
Thanks for having me.
Wow. I can't believe how much money they pulled into that thing over such a short period of time.
$700 million year-to-date.
But interestingly enough, I think when Huge, which is trading right now about 36 cents, and there's what, 1 point, it's still capped at 500 million, and it was up to 800 million or close to $1 billion.
Yeah.
So that puts it in perspective, doesn't it?
Yeah. Some comments from Jennifer Grant. This is my third time asking, why is Juju on your, and she's got all squiggly lines, shit list? I bought it when you were liking it, now I'm stuck. Should I sell and lose 50%? Please tell us why not Juju. First of all, Jennifer, got to point out, we do not give advice. We do not tell people what to do. We tell you what we're doing.
Right.
And we are obviously, a lot more active in the market and proximal to the market than a lot of our audience. So in the words of the famous stunt double or stuntman Evel Knievel, please don't try this at home. So anyways, but you're asking about Juju. Why is it on my shit list? I'll tell you why it's on my shit list, because I started buying the crap out of it based on a momentum that I observed in the chart, and then I went and read the statements on CDAR, and it turns out that the two principals have 44 million shares each at 7.5 cents fixed cost that they don't have to pay for until they exercise those shares. They're called performance shares. So in the context of the fully diluted structure of the company, I felt that I could no longer realistically expect the position to perform for me, and I began to unwind the position a little bit slowly because I'm still, not trying to wipe the thing out, but I'm selling 100 a day. That's it. So what you do is not for me to say. I recommend that you consult with a registered investment professional in your jurisdiction. And that's all we have to say about that. Full disclosure, we're not journalists. We're market participants. We are buying these companies. We're selling these companies. Some of them are our clients. We disclose when they are. That's a little bit too much for you. Then, I wouldn't rush into things just because we're buying it. Fair statement, Ed?
Absolutely. And when things are frenzied, like they were when the Juju thing broke, and we've been told the volumes, the thing went from 12 cents to 39 cents.
That sums it up right there.
Like it did what it was supposed to do. It was, there were comments that it was going to go higher, but look, sometimes the hardest thing to do is to sell when they're up, and then when you don't get a second chance. But I will say this, that now it's at a price where, that you can do things. So you can raise some. Now, is the financing still supposed to be at 15 cents?
I've not been following.
It's going to be hard to do a funding at 15 cents if the stock's trading at 10.
True that.
If you're going to say, well, why would I? I'll buy the money.
True that. True that.
Yeah, you know what?
But there's a great lesson there. Like, I'm just pointing out the fact that I would qualify myself as an amateur day trader. I don't day trade generally. And so I have been day trading lately because it's fun. And I've lost a lot of money. But
that ain't fun.
No, but there's the thing. It's like before you go buying anything, go read the filed documents and see what the structure is. See who's got what and what they paid for it, because their incentive to sell will be determined by how much they have and what price they have.
Yeah.
So anyways, don't do what I'm doing. Because
do the opposite. If you want to make money, do the opposite. Just kidding.
Wait a second.
No, I'm just kidding. Little levity. Levity.
Am
I being droll? Was that being droll?
Ooh, I love that word.
I was on Scrabble the other day.
Okay, well, there's some more questions here we're going to take from the audience. James Albert wants to know what Ed thinks of Weed MD.
Well, you know what? I know they're well funded.
Going to put up a chart?
Okay.
Let's pull up a chart and talk about Weed MD. First of all, I like Keith Merker, the CEO.
I do too.
And I like that logo. That is kind of funny. But you know, WeedMD has had a hard time really capturing the you know, the wave.
Right.
So you know, in any bull market.
Okay, so right off the hop here, let's just do a little magic here with. Here we go. So right off the hop here, you've got, this is a
Ed's MDI.
6-month chart. Oh no. Here we go.
What do you got going on there? There's the
there you got every time it gets to this level, and we saw here back when I guess Constellation got lit up here due to the thing that had a monster run. So that was probably when Constellation, you know, was that middle of August? I think it was, wasn't it? And we had, look at that. But then that came to an end and back down. But you know, I got to say again. And I like the story because they got lots going on. We've interviewed them. But technically, and this is technically, just looking at this chart, this thing breaks $1.30 on good volume, and it's right close, you know, 140-ish. But if it breaks 130, you may not want to be hanging around for a while. Notwithstanding the fact they got tons of cash. They've got two operations, one in Strathroy and one in Elmer, I believe. They run this thing. I'm convinced it's great management. It's just a question in my mind: what's the valuation? Like what's it worth? And maybe it's worth $2, but right now it's $1.40 and it's close to breaking down. But I'm not saying it's going to break down. I'm just saying that major line of support looks like it could get breached.
Well, and big news, their financials are reported on Monday.
Well, let's just see what they come out with.
See what happens.
You know what else comes out on Monday is Aleph.
Aleph?
Alethea.
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 Oh, is Monday a holiday in the United States too?
No, sir.
No?
No.
So everybody's back to work on Monday.
In fact, they go back tomorrow only for the morning. Shortened session, so they can get out and do some shopping.
You're kidding me.
Listen,
why would they want to go shopping tomorrow? I thought Thanksgiving was today.
That's what it is today. Black Friday. What's the matter with you? You never heard of Black Friday?
Yeah.
You obviously don't shop.
I'm not a shopper. I mean, I shouldn't say I'm not a shopper.
I think you are a shopper.
I shop a lot. Yeah, but anyways, okay, so next question. Hope you like that answer.
Yeah, there's a lot
06 Big House question. Where does the security of gold's value come from? Is its value not speculative and not based on productive or fundamental value? I think what you're asking is about intrinsic value. And I would argue that gold's intrinsic value is born from its scarcity. It's quite rare in the grand scheme of things of all the elements on Earth. I don't know what its rank is, but it's pretty down there.
It has to be, or else
it's difficulty to extract and concentrate. But then it's got also some great physical properties, it can be flattened to one atom thick.
It's extremely malleable.
Extremely malleable. And
it's stood the test of time. It's been around for 5,000 years.
Exactly.
So
it has been the longest lasting unit of trade in the whole global economy since the beginning of time. And if you don't think that constitutes intrinsic value, and you want to move that over to the speculative column, that's a subjective call. You're free to do so. I will argue that that is intrinsic value based on historical global recognition and acceptance of it as a unit of trade.
A lot of there's been a lot of talk about the fall of the Roman Empire, and they said it was hastened when the ruling people of Rome started putting alloys in their gold coins, diluting, printing. In other words,
corrupt the money supply, and the civilization
and then
will
the masses,
soon fall.
And then they'll come after you.
Big deal.
You know what? I hope you smug politicians listen to this, because you.
Not all politicians are smug.
A lot of the ones in power are.
Some of them are, I would say.
How about these two cats in BC, the two highest non-elected officials that are being investigated, and they've been fired. This is big news, and no, they haven't said why, but there's a major investigation
into a political.
Well, they're the two highest non-elected officials, the sergeant at arms and the deputy whatever. It's in the paper today.
Sling and blow in the legislature.
Well, they didn't say, but they got rid of them.
Okay. Okay. Sounds anyway. Like a good thing.
Anyway,
now are they going to get their blow? Anyways, another question is Keegan Webster wants to know, what do you guys think of Shopify for the MJ side of things? Tech stocks? Question mark. So Shopify is this. I actually signed up for a Shopify free trial. I had 30 days to set up a store. I was too busy, didn't get around to it. Free trial ended. They said, come back anytime. You know, I think Shopify, in that it operates in the US as well as Canada, is going to be hesitant to associate itself with cannabis until federal deprohibition in the United States, because it will complicate its, you know, ability to conduct business in the US. I think. I could be wrong, but that's my first impression. What do you think of the potential for Shopify to be instrumental or to benefit from the marijuana craze?
I don't. You know what? I'd like to be able to just say I don't really have an answer there. Really? You know, I don't even know what is Shopify Canadian or American. It's Canadian, obviously.
It's Canadian, but it operates like anybody in the world can set up a Shopify store.
Can they?
Yeah, do it right now. Check it out.
Let's set one up.
Kidding.
Let's start selling pot.
Selling pot? Boy, I'm going full circle. Back to my pot selling days. This gentleman wants to know how many days I have been sober.
Half a day?
Well, I have not had anything to drink today. I did step off the wagon last night, and I had 4 lychee martinis before putting myself to bed.
You must have went to a sushi place.
I did. I did indeed.
Lychee balls, right?
Lychee martinis with the lychee nuts.
Lychee fruit.
Actually, that's the whole reason to order the lychee martinis, just so you get one of those lychee nuts, which is one of the most refreshing.
Are they real? Are they real testicles?
What?
Just kidding.
Whoa. Hopefully not.
No, but they, you know,
I thought they were kind of chewy, though.
Testicles are.
They were kind of chewy.
You know, a lot of people won't admit it, but they're a delicacy. They are in certain parts of the world.
What do you mean they're a delicacy? Have you ever tried them?
Yeah.
What? You're not sure? You don't remember? What were those things we had again last night, honey? You put them out next to the peanut bowl while I was watching football. They were really chewy. They were. Yeah, I don't remember what they were called. What do you call them? You don't remember?
Cows' testicles. No, bulls. Cows don't have testicles. Only bulls do.
You're cracking yourself up today.
I'm pretty funny.
You are.
I'm pretty funny.
Okay, continuing with the questions. Hey guys, what do you think the next big catalyst in the industry will be?
We've talked about this.
We talk about this,
and I think we need a catalyst. But I think it would be more big dough.
Yeah, I think one of the big catalysts one of the biggest catalysts is going to be the rush into the cannabis space that will happen upon federal deprohibition. So the big catalyst
in the States,
the biggest catalyst out there for the whole sector is deprohibition in the States. Every single concrete move that the federal government makes towards deprohibition will catalyze a lift in stocks in the cannabis space. That being said, there are other sector-wide catalysts that are not at the top of everybody's mind. Like, what if the European Union suddenly called a special meeting of all members to talk about marijuana, and they decided to legalize it for medical and recreational purposes for CBD and THC. Contrary to the popular discourse, California is not the largest marijuana market in the world. The largest single market in the world would be called Europe.
Oh no, it would be the United States.
I think it would be Europe because it's only legal in 15 states.
No, but the biggest market is probably China, really.
But nobody smokes dope in China.
Oh, yes, they do.
They do?
Somebody does.
Chinese people smoke weed? I've never seen. Well, actually, I shouldn't say that's kind of a sweeping generalization.
Yeah, I think you're.
But I know that China was like. Well, let's just say I met with some Chinese private equity groups about cannabis investment, and they said under no circumstances would they ever consider investment in cannabis because it's just anathema to the whole Chinese sort of culture.
Good word.
Yeah, thank you.
Anathema.
Anathema. But yeah, so that's the biggest. Catalyst, I think.
Or else, how about a tobacco company coming in here and swooping in and taking out Afri or something like that?
That would have an effect.
That because we saw.
Well, it would have to be a multi-billion-dollar deal. Like there would have to be another multi-billion-dollar acquisition, like something on the scale of Constellation. They first came in, they bought 10%.
Right.
A year later, they took out. They put in $5 billion more. So if like Johnson & Johnson, who's currently incubating a yet private company called Avianca at the Mars Center, Technology Center here in Toronto, if Johnson & Johnson came out and said, you know what, we're just going to buy this company because we're in. Johnson & Johnson is in almost, well, its products are in every single country. It's one of the largest consumer packaged goods portfolios on earth, probably one of the most valuable. Anyways, so there's all these things could happen. But here's,
I think money moving in would be a catalyst. Like, that's a catalyst, right? Because then another company has a major war chest to go out and
I would think that there's going to be a flurry of announcements, because typically what happens as the stocks start to drift on no major news, and
they said that on the Weather Channel today, there's going to be flurries.
Really? The likelihood is that companies start to think, let's catalyze something, let's get something done, let's make a major achievement. And so that's what happened with the Constellation deal. The Constellation deal was announced, and then there was a whole flurry of announcements, not snow flurries like on the Weather Channel. Edward?
Okay.
Just saying. Final question.
Market's closed, by the way.
Any Canadian natural gas place? Any thoughts on Pony, P-O-N-Y, on the TSE?
I've heard that Pony's a good company from my buddy out west who lives in Calgary, and they sort of get pretty good, intel regarding energy companies. I don't know it, but I've heard good things, and natural gas is up dramatically in the last few months. In fact, there's a couple guys down in Florida that aren't too happy about this whole natural gas thing.
Yeah.
They were trying to manage naked calls conservatively. Right. Something went wrong.
Right. Isn't that a contradiction in terms? Manage
it's
naked calls
what's the word? What do you call a like metal wood or military intelligence? You call that a
oxymoron.
That's it. Yeah.
But actually, Ed, an oxymoron technically, I think, is a single word with its contradiction in the single word. Once it's got two words or more, it's a contradiction in terms.
Metal wood is a term they use in the golf profession, sport of golf.
Yeah.
That's a oxymoron, right?
Well,
metal
the guys
wood.
Swinging them are.
Huh? Metal wood.
Oxymorons.
Or
just without the oxy. Cotton. Anyways.
Jumbo shrimp.
We're looking
Jumbo
at
shrimp.
Jumbo shrimp. Oxymoron?
I think so.
Or contradiction in
I
terms.
don't know. Who cares? Oxymoron sounds better because it's a bigger word.
On my NDI, we're looking at the market movers on the TSX Venture now that the market is closed.
Okay.
And the biggest volume play today was actually
and your feet,
Rousseau Morning.
I'd be facing
NDI.
you right now, but your feet are in my way. Again. Okay.
My NDI.
What is the volume on the biggest trader today? The actual number of shares traded. Is it over 10?
Well, on the TSX Venture?
Yeah, 5 million?
4.3 million.
See?
See what?
Usually it's 10.
Yeah?
Yeah.
No.
It's a quieter day.
Well, there's no doubt about that.
Look at the guys. All I know, they're all the guys.
How about on the CSE?
Let's see. Let's see on the CSE.
Whoa.
Well, there's a party over at Kelly's Landing, for God's sakes.
Kelly's Landing? Where's that?
York and Front.
York and Front. What? My NDI is not off? No, it's not. It's up.
Who
it's
am
on.
I?
But anyways, so that's cool. Biggest trader on the CSE was Ascent Industries. It traded flat on 6 million shares, closed at 18 cents. Second runner-up on the CSE was FSD Pharma,
Huge.
down 4.17% on 4 million shares traded, 34.5 cents now. Let's see. Let's go with dollar volume active so we get rid of all these penny pinching pumpers. Oh, so Cureleaf Holdings had quite a stellar day. Actually, volumetrically, an extraordinarily high volume day. 396,670 shares traded, up 84 cents to 8.24. What do you got to say about that, Ed?
Yeah, you know what?
There are anomalies everywhere.
You know what? But we saw. I'm just putting up MedMen because you mentioned one of the 5 deals. By the way, there were 5 that Canaccord did that really shit the bed.
5.
Yeah, 5.
Okay.
And I know what they are.
Okay. Let's change the subject, shall we?
Okay.
Charles Taerk was here a little earlier, and here's what he had to say. Hey, welcome back. My guest in this segment, returning for the, 10th time, is Charles Taerk, President and CEO of the Ninepoint UIT Alternative Health Fund. Charles, welcome back.
Thanks very much for having me.
Charles, the market has been revalued to the downside since you were here last, mostly starting post-October 17th, which one would have thought would have been a day where the angels would be bugling from on high. This is not the case. What happened?
Well, I think if people look at what's gone on the last 2 years, people have sold on the news. And so there was a great rise from the middle of August when Constellation invested in Canopy. Great run for 2 months until the 17th of October. I think the combination of people being disappointed with the rec and some of the earnings concerns, and people have been selling off. In addition, we've seen a global equity market sell-off. You have the Dow, the S&P, the TSX, oil prices. Nothing was spared during the month of October.
Sure. Would you say that the tendency in the last 2 weeks that we've observed is that the large cap cannabis index, as we track it, which is all companies over 500 million trading in Canada, the action in that index is starting to very closely mimic the S&P 500.
Yeah, very much so.
And is that an expectation that we should carry forward going into the future? Where?
Well, no, but I think what it shows you is that the sell-off is more than just the cannabis sector. When you start to get macroeconomic factors taking a big swipe out of the equity market, no sector is being spared.
Right.
But if you look at the volatility and you take a look at the dramatic decline in some of the cannabis names relative to the broader market, there's been more of a deficit, let's say, in the larger cannabis names than in the broader market.
To what extent would you say the earnings that have been reported by at least almost 20 companies in the last 2 weeks, how much has that had an effect on the downdraft in the cannabis space particularly?
Well, it should. I think it is having some effect. And this is something, as an active manager in the space, we have been taking a look while the sector was doing really well, and we were paring back. We were taking profits in September and early October. Our view was that there was going to be some type of give back, not as much as we've seen, but we were taking profits in anticipation of that. I think the market was anticipating better revenue and earnings with an expectation that some of that revenue was going to be from the domestic recreational rollout. And what we've now seen is that for the September 30th quarter end, very little revenue was earned because most of the sales went in beginning of October. So there was an expectation of something that didn't materialize. And then you look at bottom line results of just the medical business with many of the large players really disappointing, and really disappointing on two key metrics. Some of the larger players had significant general and administrative expense balloons. So that's not operational. That's everything that has nothing to do with the cultivation side of the business. So it's marketing and advertising and other non-core operations. And there's some significant disappointment. Looking to 2019, I think earnings is going to become a more important issue. People should be paying attention to the EBITDA, the EBITDA force of these companies. They should be improving their earnings because a lot of the build out is now behind them. So we should see better profitability. And if we don't, again, companies are going to suffer. You're going to ask me, so which companies, right? Go ahead.
Well, are there any companies that disappointed particularly and any that surprised to the upside particularly?
Both Canopy and Aurora, I think, were significantly disappointing for the broader market. We don't hold Aurora at the moment. We actually took profits in Canopy during September and early October, and so our weighting in Canopy is greatly reduced. It used to be a top 10 position. By the end of October, it was no longer a top 10 position. But both had similar quarterly results where G&A expenses were much higher than consensus estimates, magnitudes of adjustment. Like we're talking 50, 60, $70 million in losses caused largely by huge G&A expenses. Right. Whereas conversely, you see a company like CannTrust, last week was a really busy week. There were about 5 or 6 companies that came out with earnings, and 4 of them were disappointing. CannTrust came out with their earnings for the quarter where they had higher revenue than expected. They had better revenue per gram than expected. They continue to gain more new patients into the medical industry than any other licensed producer, and more revenue from extracts relative to dried bud, which is higher value added revenue. So they're firing on all cylinders. They were the only company to generate positive EBITDA in the quarter. And that's important, at least for us as portfolio managers. I think retail investors aren't paying enough attention to some of the nitty-gritty, and that's where I think we have an opportunity to outperform, where regardless of the valuation of some of these companies or the size, you've got to be looking at some valuation metrics that we believe are going to be meaningful going forward.
Sure. What about TruLeave? TruLeave reported $100 million in run rate revenue for the year.
Yeah, so TruLeave is doing very, very well. This is a Florida medical dispensary business. About 6 months ago, the interesting change with TruLeave is they had about 70% of the Florida market, so really significant control. Of late, you're seeing new entrants into Florida, Curaleaf being one of them. Liberty Health is also expanding its footprint, and so they're nipping away at TruLeave's leadership. By the end of the quarter, TruLeave was now down to about 55%. I mean, still commanding performance, but you're starting to see more competition in Florida. So it'll be interesting to see how TruLeave is able to move forward, kind of keeping that control. Do
you think that the somewhat let's call it less than perfect best case scenario rollout of government cannabis distribution in Canada was to blame in part for the dismal earnings in the last, as reported by these companies? Even though it was only 2 weeks of October, I would have thought that if they could have sold everything that was ordered, so that everybody could have put that on their balance sheet, it might have been a different story.
Well, remember, the earnings release were from September 30th. So there was only about a week of revenue impact. And so what each of them have done is they've said out of their quarterly revenue, this was the amount that was allocated toward domestic rec. So
they didn't pre-sell any quantities to
the expectation from investors was, well, given that October 17 is the day when the stores open, we would expect that 45 days before, the provinces are going to have the logistics going such that they're going to have inventory such that there would be sales slips coming somewhere, and that didn't happen.
Okay, so that's what I'm getting at. Is that the fault?
So, well, that's part of it, but I think that was an expectation. I think the other part of it is ramp up in some of the production facilities is maybe more gradual than others have anticipated. You're seeing lower revenue per gram with some people, and that could be a sense of quality, whether you're an outdoor grower or an indoor grower, and then where your focus has been. If you're focused on the medical market and you're gaining patients, then your revenues, I think, are going to be stabilized by the lack of recreational rollout. Whereas if you're putting more of your resources into the rec market and you've got these disappointing logistical challenges still present, and I think that's going to take months to unravel, then you're going to see maybe some weakness or disappointment in the next quarter as well. Right.
Some of the money managers I talk to have been reducing their exposure to Canadian LPs in favor of U.S. ones because the perception is that the Canadian market is now more or less saturated and the U.S. market still is representative of opportunity, especially ahead of any federal deprohibition that might be coming down the pike. So is that something that you're doing in the health care?
Sure. So the Canadian companies, I think from an addressable market standpoint, the domestic the domestic recreational and medical market is only about $1 billion in Canada, whereas in the U.S., currently it's estimated around $15 billion. Because of the challenges that the U.S. companies have to become public companies, they're coming to Canada through RTOs on the CSE. Many of them don't get treated with the same multi-billion-dollar valuations that the large Canadian companies have that have listed on NASDAQ. So from a valuation mismatch standpoint, yeah, the U.S. companies are undervalued. They're trading similar to the junior Canadian companies. Those Canadian companies that trade under $1 billion are trading somewhere between 12 times 2020 earnings and less, and that's where the U.S. companies are. And yet the U.S. companies have very large addressable markets, have historical revenue and historical earnings, and are very well capitalized. So yeah, it's something that people should be paying attention to.
So, but the UIT fund, is it still predominantly focused on Canadian names?
No, we look everywhere.
Okay.
Yep.
Okay, so great. So tell me, how is the fund doing year to date at this point?
Great. No, it's relative to the market. We're doing well. We've given back a little bit, but year to date, our fund is up 27%. And that's really important because when people look at the sector, there's usually a couple of ways to look at it. Either you want to buy an index or you want to buy an actively managed product. We believe that our actively managed approach lowers volatility and puts people in a better position. So year to date to yesterday, excuse me, we're up 27%. The passive strategy, the ETF, is down 2%. So that's a wide difference. And really what we're demonstrating is being active, taking profits at the right time. It's not that we don't like the name, but the valuation just doesn't warrant our attention. We've got to move into other areas where other people aren't. And so having a wider portfolio allocation, occasionally owning some private companies, which we take advantage of, so we can own them earlier than when they get accepted into the index. Those are all different elements that we use in our fund.
Okay. Charles, that's great. We're going to leave it there. Thank you very much for your participation again.
Terrific. Thanks for having me on.
Next week. You're laughing.
What do you want?
Charles Taerk is always an amazing interview. And, have you noticed that their performance improves every time they come on? Like the performance of the fund is going up 27% in this year to date. Pretty good for a conservative fund that's got things that aren't cannabis in it. So you're getting the lift from cannabis. Like 27% is a damn fine number for any fund manager. Year to date.
Yeah. Okay.
Yeah. So some more great questions here. Actually, here's a great comment from Anthony Alvarez, who joins us regularly. Hello, Anthony. He says, James, my wife is Chinese, and she told me there is a section of China that already...
Shut that door.
Hey, could you guys don't mind if we do a show out here, do you?
Hey.
Jesus Christ. Yeah, we don't just have a studio here. We've also got a bar over there where people call out orders from across the room.
Turn on a football game or something.
Yeah. Anyways, Anthony Alvarez says, James, my wife is Chinese, and she told me there is a section of China that already uses CBD oil. They make it themselves. I will try to find out which city it is. Anthony, if you could do that.
It's CDB oil.
Anthony, if you could do that, we'd be most grateful. Thank you very much. Big Zinni has a comment for you. He calls you Edward Snowflurry.
Because of my dandruff?
Could be. Okay. James Watson said, you avoid questions on Huge? Just wondering if you still own it or are buying more at this level. I owned Huge for about 30 seconds one day. Not 30 seconds, but I owned it for a couple of days. And no, I didn't continue to buy it. No, I no longer own it. And am I buying it at this level? I am not. And the reason for that is because I've sort of, as a result of my experience as a day trader, and like I said, I'm no day trader, I'm no trader, period. I have decided to
TRAITOR trader.
stop dabbling in these penny stocks that have a lot more risk in them. I'm going to quality. So like GGB, Green Brands.
Yes.
Ianthus.
Trust.
I don't own Trust.
But you would like to.
I've tried to buy it a couple times, but I don't like to chase it. Origin House, formerly Canada Royalty. Love that stock.
Wayland.
Well,
there's in Wayland.
Wayland's a client, though.
Well, you know what?
It's always got to
not my
disclose.
client, your client.
Well, our client.
Well, I don't know about how's it my
They
client?
sponsor the show. The show gets money because of it. You get paid by the show.
Okay.
They're your client.
Okay. it's one of the top performers here today. Look at this. Up 18 cents at 150.
So it's bucking the general trend downward. Why do you think that is?
Maybe your comments keep coming up that do you like this one?
Maybe. No, but I think that they're also crossing milestones off the list on the operational side.
But this is the company that has something that only 3 other companies have.
Correct.
That's maybe why people are thinking.
EU GMP status. The other 3 companies with the ability to export from EU GMP facilities are Canopy Growth Corp, Aurora, and Tilray. Those
I'm
are the
just
only
going to
3.
throw up the chart here. I want to see, what... but you're going to have to tell me what exchange they're on. That's the one thing I don't...
WAYL colon CNX.
Colon?
Yeah. How's your colon?
I'm going to say clean.
That I had to block this other person who was being obnoxious on our chats because they said they were just not being respectful or productive or objective and very personal. So I decided to block them. But anyways, one of their comments was like, we can't go 5 minutes without making some reference to anal this or anal that, which I was like, that's not true. And then I thought about it and I was like, that is kind of true. Why is that, Ed? Like, have you got a dirty mind? Is it because all of our stock symbols have a colon in them?
Maybe.
It's like a subliminal thing. It's like we can't go 2 minutes without saying colon. There's no way because every symbol is like symbol dot exchange or colon exchange. So there's that.
Right.
The market is definitely shit right now. So there's that.
Yeah.
Colon.
What
is it? What else? What else can we say?
Well,
I don't know. The analogies for
enough said.
Enough said. Well, actually, but then there's the good shit. This is the good shit.
Give me some of that shit, man.
You want some good shit, Ed? Actually, who left the bag open? Who let the dogs out? Somebody left the bag open. This pot has been drying out.
Good.
That's a crud. What do you mean good?
Well, I did
That's
that.
not good.
So
it burns like hay if you dry it out too much.
It burns a lot faster.
Tastes like shite. What do you got up here, Edward?
That's Wayland.
Okay. Now tell me, what is that chart telling you about the future for Wayland?
Well, something's changed here. This thing is, look at this. This thing has got one of the best moves. It's past the middle line here between the 2 Bollinger Bands. It's up now from about $1.18, I think was the low. It's now $1.50, 32 cents on $1.50. That's about 24%.
Yeah.
Last time I checked.
So I think one of the main forces that's driving Wayland north is the fact that we are, in fact, telling a lot of people in the world about Wayland.
You got a little bit of an increasing volume here. You see a little bit of an increase in volume, which is good. Look at, we're taking it a day at a time. This trend looks to this little trend here.
Come on, Ed. Get your cartoons rolling here.
Okay, come on.
Come on.
So there's a little.
Oh, there we go. Look at that. Look at that, John.
I'm gonna have to get a.
You're watching. You're missing the live technical
here we are.
analysis.
We've broken out of that trend. Yeah, it looks like it's on
lines. John's watching.
Mini breakout.
Get some more lines
mini
on there.
MB, mini breakout, Major League Ball.
So what does that look like for, well, tomorrow's another day. Tomorrow's going to be a slow day. Is tomorrow going to be a slow day? Is the exchange open in the United States tomorrow?
Half a day.
Half a day. So it's like Boxing Day.
What half, though?
Probably the first half.
Yeah.
Because who wants to...
But everybody's still
everybody's
still sleeping from a hangover, so they're opening it up when everybody's sleeping.
Well, I would think that... if it was me, I would have started Monday, and I wouldn't go back until, I don't know, probably January. Unfortunately, we're starting our channels in our studios in London and
I tell you what I'm going to do.
Los Angeles now, but anyway, so lots of good stuff going on here. I want to take a look at the of all the constituents, we're going to take a look at which ones actually performed the best today. And I'm talking about all cannabis, the whole cannabis sector. So what I do for that is I go to Portfolio Manager and I click on the drop down and I go Total Constituents. So these are all the cannabis companies. So the best performer, or the worst performer in a dollar value basis was weed, lost 34 cents.
Yeah, but that's a small percentage.
It was 0.76%, followed by ACB, which lost 25 cents, followed by Emerald Health, which lost 19 cents. Now, on the upside, who do you think performed the best? The upside, there was no big winner. Number one was the Cannabis Growth Opportunity Corporation, trading at $1.50, closed at $1.50 today, up 4.9%. Emblem traded up 4.84%, closed at $1.30, up 6 cents. Now this is one of our one of the ones we've got on our watch list.
Yeah, that's the one that they did record revenue, 2.3 million or something like that for the quarter, lost 10 million bucks.
Isodial's back up here, up 3 cents, 1.82%. And what else do we see that we know and love? That's about it. I have to take a look at Heritage Cannabis because I own it. And where is Heritage Cannabis? Let's see here. Oh, it's not on this list. Interesting. Yeah, we're going to do that at 427. But yeah, so the biggest winner here was definitely CGOC on the day. What was Emerald Health's news today that moved that market? Appoints agrobiotech president. Interesting. All right, so anyways, the news that moved the markets today was not unsubstantial. Here's the news. Origin House has entered into a strategic partnership with boutique cannabis producer Artifact Henry's Original. The California-based Henry's Original markets handcrafted products such as pre-rolls and flower from cannabis grown in Mendocino County. Origin House will provide financing of up to $2.5 million USD to support the purchase of cannabis flower hand-selected by Henry's. The finished Henry's Original branded products will be distributed exclusively through Origin House's California distribution platform. Canopy Rivers entered into an incremental funding agreement with its joint venture partner, Farmhouse Inc. Under the terms of the agreement, Rivers will provide up to $40 million of secured debt financing after receipt of the sales license at Farmhouse's initial production and processing facility. Proceeds are expected to be utilized to supplement resources for domestic and international distribution and upgrading Farmhouse's nursery, processing, and greenhouse infrastructure. Canopy portfolio holding LiveWell Canada announced they have closed a non-brokered private placement of 1.94 million units at a price of 80 cents per unit for total gross proceeds of 1.55 million. Each unit will consist of one common share and one common share purchase warrant. The warrant will be exercised into a common share at a price of $1 per warrant for a period of 24 months from the date of closing. Canex Capital Holdings announced they've secured a US $32 million investment from Gotham Green Partners, a large investor in the global cannabis investment space. Through 2018 and 2019, the company's plans to allocate the proceeds of this financing on processing, distribution, and retail acquisition and build-outs in additional U.S. states. Also, brand building initiatives, including cross-licensing Washington State's brands into new states. Expansion activities consistent with Canex's multi-state strategic objectives and repayment of approximately US $9.4 million of debt. Nutritional High International announced that they've entered into formal agreements to purchase 51% in JMeds for gross proceeds of $714,000 USD. Nutritional High also secured worldwide licensing rights to JMed's intellectual property and an option to acquire JMed's remaining 49% equity interest. JMeds produces cannabis-infused specific lozenges and sugar-free mints distributed across California. Naturally Splendid Enterprises announced that Wahupta Ventures has accelerated its subscriptions for the second and third tranche, whereby Wahupta is committed to invest up to $2 million. Wahupta has subscribed for $350,000 at 18 cents per share in lieu of completing 2 tranches at a price of 27 cents per share. These proceeds will be used to advance Naturally Splendid's new application for a processing license. The fourth and final tranche will consist of the remaining $1.5 million and is expected to close in 45 days from the close of tranches 2 and 3. Proceeds of the fourth tranche will be used to complete the installation of the extraction facility. Wahupta!
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 Who picks these names, Eddie? Jeez, that's a good one. If they ever go public, what's the symbol going to be?
Wait,
Whoop, whoop.
did you just say, who picks these names?
Who picks?
Eddie? No, I don't.
I think you do. They've got your sense of humor written all over them. Wahupta! Anyways.
Okay, let's pass the pipe.
Pass the peace pipe?
I was going to say, just pass the pipe.
It's almost Miller time, Edward.
Oh, I can't wait. I got a real thirst now.
Now, don't forget, if you want us to ask you any questions, you've got to do your own little video and send it to us at MidasLetter@MidasLetter.com or link to it. Tomorrow, we've got Supreme Cannabis founder and president John Fowler is going to be here to talk about his next moves in the cannabis sector and other stories that we're working on with the Midas Letter field crew, dissecting the confusion around roadside testing. What? And we'll be talking about cannabis fashion. Yeah, that's right, high fashion. Like the new logo?
You know, you should wear your hemp shirt.
My hemp shirt? Is that like a hair shirt?
Yeah, only it's made out of hemp.
Really?
Yeah.
You can have a hemp hair shirt?
Hemp hair shirt.
Hemp hair shirt.
Hemp hair.
In a shirt.
In a shirt.
Anyways, that pretty much wraps up our show today, and so we hope that you enjoyed it.
Tune in tomorrow.
And we hope that we see you tomorrow, but don't forget to subscribe and like and tell your friends, and subscribe to the newsletter at MidasLetter.com if you really want to see what's going on. Every week we'll send you the list of the best moments in our show and in our written content. And don't forget to go to Midas Letter Clips if you just want to see the little clips that we're doing here instead of watching the whole show. Thank you very much for joining us. We'll see you tomorrow.